All right, Rebels. Today we're diving into one of the most dangerous blind spots in the creator economy, your finances. Not the sexy stuff, not the downloads, views, or viral moments. I'm talking about the hard truth behind the numbers, the truth most creators avoid until it's too late. And to guide us through that financial jungle, I brought on Sonny Grappone, the president of Precision Accounting and Consulting, a guy who went from running an auto body shop to battling addiction at 25 to rebuilding his entire life and becoming the financial strategist behind entrepreneurs, construction firms, law practices, and creators trying to scale with clarity. This episode isn't fluff. This isn't theory. This is financial intelligence coming from someone who has lived every version of the struggle, rebuilding from zero, raising a family in one of the most expensive regions in North America, and helping business owners stop guessing and start making decisions based on the real data. If you're a podcaster, a creator, a freelancer, or someone trying to escape the paycheck to paycheck trap, this conversation could change how you see your business forever. Strap in. It's time to get financially dangerous. Today, we're talking with Sonny Grappone, the president and founder of Precision Accounting and Consulting, a New York-based firm helping entrepreneurs transform their finances using automation, cloud systems, and real-time data. But Sonny's path wasn't traditional. From running an auto body business in his early 20s to battling addiction and rebuilding his life at 25, to climbing into high level accounting roles with Northwell Health, Cantor Fitzgerald, and Hudson River Trading, Sonny has lived the full journey of reinvention. Today, he works directly with business owners, including creators, giving them clarity, structure, and the financial intelligence they need to scale with confidence. Sonny, welcome to the show.
Thanks, John. Thanks for having me. It's a pleasure. Excited to get started.
So, what was the first moment when you realized finances weren't just numbers, they were the foundation of what changes your life?
Uh gosh, probably at an early age. I've been surrounded by it my whole life. My mother was a bookkeeper for 35 years. So I was always kind of brought up with that mentality, to have a secure financial, hold on your finances. Even from a young age. I remember when I got my first job at 16 years old, around 17, around there. I've been working since I'm 12, but like my first like legitimate job. Um, where I had bills to pay. My mother used to make me pay my bills on a weekly basis because I had a car insurance, all that stuff. So she would basically take my monthly bills, divide by four, and that's what I was allocating every week. And she always just kept me in that structure of just organization and finances. And my mom was big on the 30-30-30 rule, right? So meaning that you take 30%, of your paycheck goes to your bills, 30% goes to savings, and then I would say like the last 40%, I shouldn't really say, 20% would go to like, fun and, whatever you want to do. And then the other 20% investments, and I've taken that with me throughout my whole life. There was times when, like, as you said, in my journey where, I kind of veered off the path, and that wasn't the case for more than a few years. But outside of that, when I got older, I got married, built a family, built a home. That's how I attacked that. Because when I got married, I met my wife at 33. Yeah, 33, and within a year we were married. We had a house. A year later, we had our first daughter. Then a year and a half later, we had our second. So it was like everything just hit me at once, and I took everything a day at a time and attacked it at the foundation and the principles that my mom set forth for me, on the finance side, and I brought that in to I think I had an act on what to look for on the business side, just always being brought up with that mentality and mindset. I first went to school for hospital administration, and I wanted to get into nursing for a while, and I just wanted to help people, and my mother had had a surgery, and a major surgery, and I had to. It was the first time I was like actually in a hospital setting for a few days and got to see the ins and the outs. I remember just looking, at my father, and I was like, this is not made for me. You got to be a special person for this, and I give them all the credit in the world, but it is just a different mindset, I feel like, and so. And I said, let me take hospital administration, that's more on the admin side. And I had to take accounting courses, and I took finance courses, and I took an act in that. And I found accounting's like the only thing for me personally where I like the balance of it, right? If it's happening on this side, it's got to happen on this side, right? It always has to balance, right? It never lies, And I felt it was one of the only things. And this is where I always kind of give advice to young kids and people trying to find their career, right? And I find that whatever you could find that keeps you present, right? Fully committed in the moment where, like, you are in the zone, right? Like coding and stuff like that people do, right? When you could find that, for me, that's how I found my niche, and like accounting, I felt like it was the only thing where I can kind of wipe out everything that's going on around me inside here and truly focus, and people think you have to be good at math for accounting. Everyone thinks math. That's not the case. It's more problem solving. It's like putting together a puzzle. Most of the technology out there right now does all the math for you. So it's more analyzing the numbers and kind of noticing trends and that type of stuff. So yeah, that's it in a nutshell.
That's cool. It takes a lot of discipline to be running that 30-30-40 rule. I know I've tried so many times myself, and I just keep finding myself that I keep falling off. What do you do to stay on that discipline?
My wife, my wife, figure that one out. My wife is the one that controls the finances, and I'm the accountant in the household. So, um, my wife is very disciplined in saving, and she always liked that I had that mentality. But like you said, life gets ahead of you. You have a family, you have kids, right? Um, I always so I'll relate this to business owners, right? Business owners, I would say 60-70% of the time, like that's who I work with primarily, right? A lot of business owners in the construction industry, hospitality industry, lawyers, law firms, you name it. But my main niche is like a lot of construction too. A lot of guys think that if they can make payroll, and I always say this, if they can make payroll and they can pay themselves, they think they're doing okay. And that is not the case, right? And that goes into the same for the household, right? You feel like if you could pay your bills, right, and you can get through your weekly expenses, you're doing okay. Nobody really wants to look up, under the hood, right? If I guarantee you, if most people, if I ask them, do you know if your expenses exceed what you bring home every month, they probably couldn't tell you, and neither could I at some point. Some points it's different. But if you really took a look under the hood and you really saw how much you're bringing in and how much you're spending on a weekly basis, I'd say probably 70-80% are in the red, right? What do they say? 70% of America lives paycheck to paycheck, right? And I live in a bubble, and I was just talking about that with my wife the other day. I live in Long Island, New York, right? So Long Island is very hustle and bustle. People make money here, they do, and and listen, in a good way, but it's also in a bad way. It's a double-edged sword because they make it impossible for you to survive here. Like my taxes and my mortgage, just this year alone, my mortgage has gone up $500 a month. Okay. My insurance went up almost like $2,000 a year. Like, they're making it impossible for you to live. But at the same time, this is where you can earn, right? But like we are in a bubble here. If you go outside of the East Coast, like, Massachusetts, New York, Florida, and on the West Coast, California, right? Oregon, Washington. If you go outside that, you go into the Midwest and the majority of middle rural America, they are not living like us. right? And but the good thing is that now with remote working, right, that you can make a New York, California based salary, living in, Oklahoma if you really wanted to. I was talking about this with my buddy the other day. People complain like, oh, the market, I can't find a job, it's really tough out there. I've been looking like 60 different. I don't find, I'm going to put it blunt, that's bullshit. Okay. You put me in whatever environment, 2008, right? Any recession, I'm going to find a job. I'm going to find a way to earn and to provide for my family, no matter what the circumstances is. It's just how far are you willing to go, right? And how creative are you, and how much work are you willing to put in, right? And what are you willing to sacrifice, on the finance side to get there, right? And get your house in order, right? And part of that is, like I said, really knowing your net income. The way you run business is the way you could run a household, right? Like I said, they have so many applications now that you can hook up your bank account, right, to a software, and it will give you, like in accounting, right? We have a profit and loss statement, which I'm sure you've heard of, right? Where it gives you your revenue, your cost of goods sold, right? To make the product you're selling, and then your general and admin expenses, right? And then after your revenue minus all that, that's your net income. Either you're at a loss or you're at a gain, right? You could do the same thing at the household level, right? And hook up your bank card to one of these applications, and it will do the same concept. And you can really see where you're at and where you really need to cut, and really where you want to be in a year to two to build those goals to get where you need to be, wherever you may be. So I always find, like, it's corny when, adults tell you, when you're younger, like, if you really put your mind to something, you can do it. But it's so true. Like, I always find that, like, after the age of 25 for me personally, and they've done studies on this, that's where your mind is actually matured enough to know what you actually want to do, where you're out of that kind of baby mindset, and when you could get into that kind of adult mindset, and really apply yourself to your craft, right? And, like, find something, like I said, that really brings you in and makes you and keeps you present, and you can really hone all your skills. Um, you put your mind in the work and into it, where you're working 12-hour days, wherever you can find it. I have two kids under four. Okay. My wife works. I work. We have a full household, and I find time, no matter what it may be, whether it's, in the morning time, 12 o'clock at night. Most of the time when I'm working, I find the time to get what I need to get done in order to sustain the lifestyle that I want to live. And personally, I went to school for 4 years, right? That doesn't mean anything. Somebody could have worked just as hard, but not in school. I'm not willing to. I didn't work that hard to settle for less, and that's the mentality that I always say. Of course, I want to save, but I also want what life has to offer, and it's out there for everybody to get.
You said a couple things that I wanted to touch up on. One is the cost of living in Long Island. Here in Toronto, it's not any different. It's like you have high salaries for the most part of people, but the cost of living here is like extraordinarily out of whack from what it costs people to live. I recently went grocery shopping and I spent $150 and I had 2 bags of groceries. And it's just me. It's like, I don't understand how people can afford to have a family here in, like, I guess you can call it the northeast part of North America, because technically this is where the big money is at, like Toronto, New York, Chicago, Detroit. That's
Sure.
where, I don't know Detroit anymore, but used to be. But
Yeah.
that's where the major centers are when it comes to money. Um, the importance of having podcasts and content creation is that you can work anywhere in the world and still be able to live a decent life and have a family. A lot of creators, however, they do feel awkward when it comes to talking about money. What helped you become more comfortable with it?
Comfortable in what essence? Like talking about money with people, or like kind of from what perspective?
I guess you can say from the perspective of taking an honest look at your income as a trying to turn your hobby into a business.
Yeah, well, you have to be able to see too. One, are you able to get there, right? Like, I just started so we have a podcast that we do, right? It's called the Profit Principle Podcast, right? And we're starting a new series now where we're going to be bringing in business owners and high net worth individuals. I shouldn't say high net worth, but sustainable living individuals that are probably making, over 100K or more. And we're going to take a look under the hood, right? And we're going to see what's going on with them, kind of how I would do with a client, right? And to be able to, and listen, the biggest motivator is pain, right? That's how I make my money, right? I have to seek the pain out there, right? And have a solution for that, right? My solution is that in my business, right, in order to separate myself compared to other accountants, right, I guarantee that I'm going to save you more than my fee, right? So like on a yearly basis. And I say that the reason being is because when I go to business owners or in high net worth individuals that need our help, they look at me like an expense. And I'm not an expense. I'm an investment. All right. I'm here to make you more money or here to show you the way to achieve those goals that you want to do financially. Right. And normally people don't come to us when things are good. They come to us when things are bad. So I guess that's where the comfortability kind of goes out the window, right? And people aren't able to pay themselves anymore and make payroll, or maybe they're able to make payroll and they're not able to pay themselves anymore, or they're not able to live their standard of living anymore either, right? They're not able to, get the nice car that they want, or sustain all the subscriptions that they have. I guarantee you, if I went through most people's bank statement, right, and I added up all the subscriptions they had, they probably would have no clue what half of them were. There's just so much waste out there. But if you're losing a lot of money, okay, it usually sticks out like a sore thumb, right? Like if you want to trim like expenses and everyday costs, that's all great. But if you're like really like suffering and you're not able to make ends meet, there's usually a big underlying problem there. Some type of expense that you're not talking about, or may be there. You might have a car payment that's $1,500 a month, which I've seen. $2,000 a month, or maybe you're getting into a mortgage that's I've seen guys now that are paying upwards of $6,000 to $7,000 a month. I mean, that is insane, and that is like the average mortgage now that I'm seeing people do. Um, and I don't understand it. I'll be transparent. My mortgage is $3,200 a month. When I first bought my house, it was $2,400 a month. Okay, like I couldn't do $6,000, $7,000 on top of the general expenses and stuff like that. So like, how are we getting ahead of these things? You know, it all it I feel like people need to be more equipped before they make those decisions, right? Not be so impulsive, right? Really thoroughly do their research, on what you need in order to sustain that type of living. So it's either you're going to be proactive or you're just going to be impulsive and get into enough pain where either way you're going to come talk to me and be and, like I said, and throw it and let that barrier down and talk about the uncomfortable things of finances and look under that hood.
I think, I mean, if I had a $6,000 mortgage, I wouldn't be able to sleep at night. I'll be honest with you. Mine's mine's just over $1,000, and it's like still a little bit of a
I can imagine. Yeah, so
6,000. I
it's
Yeah.
crazy, man. And that's listen. Most people now have to live on a two family household, right? Meaning that both the wife and the husband have to work. I remember telling my wife when we got married and we were looking for a house, and I was like, "There's no way I can do this on my own." Like, listen, I started off working as a staff accountant and like, but it's amazing to me because when me and my wife first got married and we had our house and it was just me and her, I say this in all transparency, right? We were barely making 100, 120 grand combined and we were living pretty good. We were happy. We were able to, kind of do what we want. We weren't traveling, but like now, I'd say we're doing a lot better than that with two kids and making more money. And like, we can't, every time we get two steps ahead, it's two steps forward, one step back. Or I should say more so, one step forward, two steps back. Okay. And that's just, a part of, kind of being an adult and handling that stuff. It's just, I feel like when you have a house and you have all those expenses coming in, it's just you can never get ahead, and it's no different than a business owner either. Business owners, same thing. Like, the more locations you want to open up or you want to expand, come more expenses, and profit margins are very tight. Right. Most profit margins for any construction, for example, is 10%, what these guys are working with at the end of the day, meaning that their expenses are usually anywhere from 30 to 40 percent, right? Their payroll is another 40%. And usually your other expenses, your admin expenses, all that other stuff, if you're lucky, it's 10%, but most of them are 10 to 20% and even more. And then after rent, all that stuff, you're losing money. You're at a loss, so it's like, where do you go from here? And you have to be willing to look under the hood, and you have to be willing to look at trends, right? To see, like, even for a person, right? How did it compare to last year, right? Look at your revenue from what you were bringing in last year to this year and see what changed. Were you bringing in the same revenue? If you were bringing in the same revenue, right, and you're losing more money, what happened? Right? Did you make a decision financially that you shouldn't have? Right? I use the example I've been sharing on a lot of podcasts. I find individuals that all the time. I had business owners, a few of them, that I look at their revenue, compared it to year, and I have where, like, they're making 1 million, 2 million, 3 million, 4 million, and then all of a sudden they plateau at like 5 million, 6 million, right? Or even 7 million. They plateau at a certain point, and then, like, for a couple of years, 2 to 3 years, they're making that same revenue, right? But all of a sudden, from year 1 to 2 to 3, while they're making that same revenue, all of a sudden they're losing more money. Why is that? And some, I found that, they were paying too much payroll. Like, all of a sudden, one guy I've had, he increased payroll $500,000 in a year, and he was still making the same revenue. How is that possible? What changed? If you're doing more revenue, okay, then you need more people. But if you're making the same revenue, you shouldn't need more payroll, right? And he just didn't have his hand on the pulse, and that goes to this, like I said, you could roll that down to the individual, at a singular level, saying that, like, if I'm making $300,000 a year between both people, and all of a sudden, the following year, I'm losing, 100 grand a year or 50 grand a year. What the hell did I do? But most people aren't going to do that. So that's why I'm trying to open up to the public. Like, if that's you in that situation, right? Have a talk with me. We'll do it on a podcast. Let's look over your expenses. Let's look over everything. I'll show you a presentation and kind of break it down, paint by numbers, right? Where you can understand it, and that's the other thing. You have to make people understand, right? You have to bring that simplicity, like I said, paint by numbers, and make them read, high level what's going on here. Like, treat your household like a business, like if it were your own business.
The paint by numbers thing, I like.
Yeah, the paint by numbers thing is great. It's great. That's the only way I get people to actually look at what we're sending them, because at the end of the month, I owe them financials, right? Like a profit or loss statement, a balance sheet, to kind of see where they are financially, these business owners. And unless I make it like paint by numbers, where I kind of dumb down everything for them, they're not going to look at it, nor they're gonna be too afraid to ask the questions that need to be asked. And I encourage it. Ask those questions, right? That's the only way we're gonna go. We're gonna get anywhere, and that's the only way I'm gonna save you more than my fee, right? Which, like, and I've done the numbers. I have a 93% success rate at that, of saving you more, right? Like I did with the guy with the $500,000 in payroll, right? I
That's huge.
justified my fee for like almost 4 or 5 years, right there.
Yeah, that's
So
huge. Um, the point that I was trying to make is that a lot of content creators and podcasters, we do paint by numbers, but I have a feeling that we don't paint by the right numbers, especially when it comes to looking at our podcast or our content as a business model. We mostly look at stuff like views, downloads, likes, comments, and oftentimes these numbers can be misleading. What financial or operational KPIs tell the actual truth about whether a podcast or a content creator is becoming an actual business?
Well, I think you got to look at it compared to a regular business, right? How much input are you putting into that podcast, and how what is it producing? Right? You're looking to right. What's the end game with a podcast? Tell me, right? You want to get advertisement, right? And the advertisers pay you money, right? Is that am I missing something? Like, cause I started a podcast, but my podcast is not more for a business. It's, it's more for to just expose people to finances and numbers and hopefully for business owners to see that to me, but I'm not trying to make a living out of it, right? You guys are, right? So your end game is what? It is to get advertisements, right? To pay you money where you're making, profit. And you have to look at it like any other business, right? Like when I pay somebody, right? How many clients are they doing? How many clients are they handling in an 8-hour day? And if I'm paying you $60,000 a year, time, on a 5-day a week basis that you're working 40 to 50 hours a week, what are you outputting, right? So how much time are you putting into the podcast, and how much should that if you're putting, I don't know, I'm saying 10 to 20 hours a week, what should that be producing for you? Right. And that's the business model that you should say, because then if it's not producing, the right numbers for you, um, you know, that's something you have to look at, and if it's even worth your time, right? The beautiful thing about podcasts, right? You really can't dive down too deep on the finances because there's not a lot of startup costs, right? What are you really putting into it? Right? Microphone, right? Headsets, stuff like that. Some subscriptions for where you're hosting. But beyond that, there's not much more you can look at. So where you have to look at is time spent, really take a detailed look on what you're spending and what you're putting into this podcast and what it's producing against what you're putting in. Because then you have to, as a business owner, whatever you're trying to make, you have to choose your time wisely. You do. Like, I'm not going to spend time cutting my lawn when I could pay somebody to do that, and then spend that time. Say if I pay somebody $20, $30 an hour, right? Okay, then I could take that hour and focus on getting a client, right? That's going to make quadruple that, right? Like, so like, use your time wisely, right? If you're putting your time into, doing episodes, it's not producing the input. Okay, then stop spending so much time, trying to get trying to get influencers and people to follow your podcast. Go back to the drawing board and see what you're doing wrong instead of just like, kind of like, what's the definition of insanity? Doing the same thing over and over and expecting a different result, right? Like, case in point, right? Like, you have to bob and move and kind of look at different variables in order to get the result that you need, that you want.
Yeah, but a lot of time in the beginning of, especially with indie podcasters that don't have a lot of money, like most of all, everybody that has been following me since the beginning know how much money I have been spending on this podcast every month, and it's just under $300 a month. And
Okay.
now I've actually cut that, and my goal is to get it to under $150 a month. So I'm trying to cut it by half.
What is that providing you? $300 a month, if you don't mind me asking.
Um, all this has been paid
Okay.
for, mostly subscriptions to StreamYard, subscriptions to Zapier, subscriptions to uh, mailing, mailing, uh, mailing stuff to make my job a lot easier when it comes to actually producing these episodes.
Can you automate? I mean, listen, like my mentality, right, in accounting and to any business owner, depending on the business, is work smart, not hard, right?
Yes,
We are in that time frame, uh, this era where we have so much technology at our fingertips, where like that has to be your mentality going into automate as much as you can,
yeah,
right, and scale as much as you can, right? So
one
from that aspect, go ahead.
100%. My entire focus on this podcast and all the other podcasts that I'm trying to run is automation. I want to get as much work off of my plate and into the system, into computerized systems, so that I don't have to do a lot of work. That's where the pay to play kind of comes in, and that's why I found now tools that I can. It's become a lot cheaper for me to do that, and that's where the money comes in. I'm looking, like I said, like I'm looking to get it now. Right now, I'm just under $170 a month. I'm seeing if I can, find an extra $20 somewhere.
Okay. And now is this your full-time gig?
No, oh no. I wouldn't be able to survive.
Yeah. What do you do full-time, if you don't mind me asking?
I'm a field service technician for a printer company.
Oh, okay. Okay,
So
gotcha.
I have money coming in, but now it's just trying to figure out how do I make this profitable to kind of not have the full time job and just focus on this and just make this just go expand to the next level. That's
Now, is there any other way beyond the following? Like, how does it happen where you get approached by these advertisements? Is it just like, where do you get the most content following? Is it going to be through YouTube, Spotify? Are you studying those data and analytics to kind of see what's trending the highest for you? Have you expanded to different platforms, or kind of use marketing? Finding the right marketing tool in order to do that for you. You know,
Yeah, I do follow the downloads on a daily basis. Where are my listeners? What are they listening? What content are they consuming? Because I try to do the lives and I try to make shout outs for everybody that's kind of there. So I think the majority of the potential advertisements comes from me reaching out to potential advertisers. But again, indie podcasters, the downloads are not there yet, especially with us. I mean, the downloads are not there yet, and that's
yeah.
understandable. We just started last month producing episodes and bringing guests on, so that takes time. That takes time, and I'm lucky because I have a full time job and I can afford to do this.
Right.
What other KPIs would like a potential creator in my shoes that doesn't have a full time job? What would be the more important ones for them to be looking at other than downloads?
Other than downloads, gosh, I wouldn't say more so KPIs, right? Like, um, I would kind of see. I would have to see the numbers, right, to kind of dictate that, because I would probably say that people are. I think the correct KPI, or more so kind of niche that you should be looking at, or what you should be investigating more, right, would be trending topics, right? Like, for me, I think that would be like, for example, right? Like, I use a marketing guy right now for the construction field, right? I do specific I have a specific niche in the construction field that I do very well, that is highly valuable, and there's just if the people that do find out about it, I don't even have to sell it. They Once they find out about it, it's such an easy sell. It's just getting it out there, right? So it's called job costing, right? So, like, a lot of contractors, right? They have no idea. I would say 75% of contractors have no idea what they're making off of each job. If you ask them, is this job profitable? Is that job profitable? They can't make heads or tails on it. And the problem is because they don't have people inputting the correct data, right? You're only as good as your data, right? And the same thing would probably go in on the podcast side, right? Like, if you're collecting the correct data, or the data, in accounting, it's so valuable, but you have to have everybody doing their part in order to achieve that, right? In order to get that correct data, right? So I found the guy, um, on through a marketing channel, that we heard about. He's pricey, but what he does is he's found a way through AI to kind of narrow down what construction owners on the internet are looking for, right? Like, and he basically, it's like a reverse engineering type of thing where he's looking for people that are looking for um, job costing, but in another way, in other keywords, right? And he kind of, looks at their search engines, and he finds a way. Basically, now with AI, you can get IP addresses, all that stuff, right? And he's able to kind of manipulate the way where he can kind of create a relationship with that person once he finds the right person through LinkedIn, and kind of, you know will warm that lead up, in the same way. I just use that as an example for you guys to kind of, use the right marketing approach. There's so many tools out there right now to kind of see what are right now, you would need to see on KPIs and data, right? Like, what are the hot trending topics, between each age group, right? Like, what age group are you trying to, appeal to? You're not going to appeal to all unless you're Joe Rogan, right? Like, be more realistic, right? Like, be more realistic and know your audience, right? I have to say that to myself and my partner all the time. I have to remind my partner all the time. We have to know our audience, right? Meaning that, like, I can't be overperforming and going out of scope for my clients that don't pay for it or don't care, right? Right? Like, why am I talking about a topic on a podcast that is not going to? I did that with one of my episodes. I had a guy from one of the payroll companies that I work with come and talk about construction payroll, right? And just, the ins and outs of it. Most of these guys don't give a shit about that. It was such a waste, and, like, I had to learn that by making that mistake, right? And being aware of that, also awareness. If you're not aware, you're going to be making the same mistake over and over. Through awareness comes change, right? So you need to be able to be aware of these mistakes that you're making, right? Like, where's my podcast going right now? What demographic am I trying to reach? Right? Who am I trying to appeal to? What age group, right? And then what are the topics that we're hitting, right? Okay, so I have now the demographic that I'm trying to reach, right, on the age group, right? And what industry specific am I trying to reach in that age group, right? And then find a way to kind of manipulate that into AI and the internet to find, what are that age group and that demographic searching, right? Are there enough people that are seeking that information? And if they're not, okay, then I need to appeal to another demographic, right? Because that's where it all comes to. Is if you want to get followers and you want to kind of, take a different approach on getting those followers and not looking at that data, you know, well, this is the type of approach that you have to look at right now. Is the one, like I said, the demographic on what you're trying to appeal, the age group, right? And then kind of finding an AI tool or some type of somebody to invest in, that will, most marketing guys is so funny, right? They'll make you every promise under the sun, right? But if you tell them, then, okay, so let me pay you whatever you produce by. Why am I paying you $2,500 a month? And I'm taking a huge risk. Like, I just had this they're called Cleverly. They're a great company. All right. They are. They're AI based. And what they do is they go on LinkedIn and they basically build out templates for you. And you say, I want to hit this industry, construction. I want to hit restaurants. I want to hit lawyers. I want to hit doctors. Right. And this is my website. These are the services I perform. And they'll create a whole list for you, a whole template of content, and then they'll go after and grow your connections on LinkedIn. I find, as a business owner, LinkedIn is the best social media platform in order to get to the business owner. And they take this and then they basically grow your connections and your content that you're producing on LinkedIn tenfold. They grew me from, I think when I started on LinkedIn, it was like 50 to 100 connections. Now I have over thousands, right? And I produce billing where it cost me probably, I want to say probably $5,000 for the year using this service. Since I've used the service, I've made up in billing about 60 grand in a year. So that 60 grand that I made in billing from using this service, paying $5,000 a month, is going to pay for that service now for 10 years, probably, you know, and it justifies itself.
Yeah.
These guys now are like coming to the point now where they now started a cold calling project where they're going to be cold calling clients for you. They want $3,500 a month. okay, with a 2-month commitment. 7 grand. So you mean to tell me I'm going to give you $7,000 of my money and hope that you get clients and line up appointments for me without any real proof, right? Like, so like, if you give me the client, I'll give you a piece of it, but nobody's willing to back that up. So you have to go out and kind of do that research and learn that marketing and AI stuff, on your own, and find that demographic that that you're searching for in order to get more followers, or change your approach on the audience that you're trying to appeal to.
You brought up an interesting point there. Why would I give somebody like 7 grand or $2,500 for them to go teach me something without any real proof? And a lot of podcasters, especially startup podcasters and indie content creators, they fall into that trap where they'll come up with a program and they'll just come up with a random price, say, oh, my program, I've worked 6 months on my program, and I think it's worth $2,500. And it's like without any real proof that it actually works.
Yes, yes. You have to have case studies, right? You have to have you have to have real individuals, kind of real proof, right? The proof is in the pudding. Like, I have a program, right, that I'm rolling out, right? We do a lot of tax savings for people, right? Like, a lot of people don't want to pay taxes now, and they need to find ways around that, right? Individuals, that goes to individuals in the business level, right? I was just talking about I bought a car yesterday. Terrible story, but like, I bought a car, for my business. I'm taking the Section 179 deduction, right? So that allows you that if you buy a car over 6,000 pounds, you can write off the whole car in year one, which is a great write-off if you can do it. So I buy the car. This is just a funny story. I buy the car 2 weeks ago. Within 4 days, I get in a car accident, and insurance totals out the car. So like, it was just like a nightmare, and I haven't been in a car accident in 15 years. And all of a sudden, the first car that I actually buy out, it happens, and it was like little damage. And Geico said, we're totaling out the car, we'll give you the money for it. I said, all right. So now I had to buy another car. I went yesterday and I made the purchase, and I'm talking to this guy's telling me that he makes finance managers. If you're looking for a good field to get in, become a finance manager at one of these dealerships. I was in awe, and I know they make this much because I've talked to other finance men. These guys are pulling in half a million a year, easily. 400 grand to 500. And I know this for a fact because I've talked to other ones where I did a tax return for a guy at Nissan that was a finance manager, and at Nissan he was making about 350 a year. Okay, so I was just like, what? And I guess these dealerships, they're pushing, they can afford to pay those guys, right? But we were talking about tax breaks, right? Because he was looking a way to shelter his money and pay less taxes. You're using, items like HSAs, right? Like, you could put away on a health savings account if your job offers that. You can max it out at 8 grand per individual for the year, where you're not paying any taxes on that. I have another loophole where I'm trying to wellness programs for business owners. Okay, they basically, what a wellness program is that in order to incentivize to get better talent out there to work for you, right? The government puts out this program where you can offer your employees a wellness program where it offers gym memberships for, that's paid by the employer, mental health counseling, medical concierge, all this stuff. And basically, it eliminates huge FICA taxes that you pay on your FICA tax, and it lowers the W-2 wages for an individual. Say someone like you, right? That, say you're making, I'm just using an example. Say you're making around $700, a week, right? With the wellness program, they'll give you a stipend of, say, I don't know, $60 to like $150. I'm just using a number, per paycheck. They'll give you a stipend, all right, pre-taxed, okay, that basically lowers your FICA your W-2 wages from $700 now to, say, $550, right? And then the government reimburses that stipend on the back end, and you basically come home with the same W-2 wages, right? Same wages, but your pre-taxed income is now lower. Okay, so you're now saving basically on that $150 savings. You're basically being taxed at the $550 while bringing home still $700. It's a complex program, but this is like stuff that we're trying to offer, like the kind of clients to kind of show them the value we're adding, but we have to market this, right? And when you tell people literally you're giving something for free, it doesn't cost them anything. All right. These companies that instill these wellness programs, what they're saving you on the wellness program, that's where their fee comes out of. So nothing's coming out of your pocket. So say the wellness program saves you. We just did a business a month ago. The guy is going to end up saving on a yearly basis $240,000 a year. Okay, on FICA taxes. The wellness program is now going to take, I don't know, say 30 grand out of that $240,000 that they're saving them, and that's going to be their fee. So it's no cost to the business owner, and this is all implemented by the Affordable Care Act and the government. All right. The fact that I tell people that it's no cost to them scares them away. It's insane that when they hear free or it's too good to be true, I don't want to look at it. So it's like, how do we market this, man? Like, I have to like charge people in order for people to take it legitimate, and finding the right marketing approach, to do this. So now I hired this marketing guy who's looking up people that are in budget deficits, that are looking ways that are looking ways to raise capital. And once he finds those people, he's going to create a relationship with them to kind of bring us in and show them a way that we could get them more funding. We did a police station, station out in Indianapolis, that needed to hire 3 police officers, but they didn't have the funds to do it. So we went in there. We implemented a wellness program for the police department out in Indiana, and we were able to find them enough funds to hire 2 police officers, not 3, but they were ecstatic. So now we knew, okay, we found this, let's find more, So like also once you find like what works and you get a taste of it, capitalize on it, pounce on it. So once you find that audience and you see 1 month, right, that you're bringing in all these people, okay, on that one episode, this was a hot topic right here. Let's get more of that, right? Let's trend more topics off of that.
You said something curious there. When you told people that this is a free program, they they walked away from it. But when you started charging people, basically, they started coming to it.
Yeah.
Why do you think? Why do you think that happens? Because as a content creator, we're told and we're taught your low end touch point has to be free to give people for free stuff. But when you do it, you see no downloads to it.
Yes, because people don't want to bother. If I'm swiping on TikTok or I'm swiping on Instagram, get your free download now. You know what I'm doing? Swipe. Yeah, I'm not downloading that, right? Like, and it's just the psychology of everything, right? I'll use a perfect example. You ever hear the employee retention credit? It was a big thing in the
No,
last 3 years. It was huge. So the
in
employee retention credit was like PPP. Remember PPP?
I'm up in Canada, so we don't have the same programs.
Well, I actually worked with a guy from Canada that helped me on this, right? Sean B. He's a great guy, Slick Marketing. I'll give him a little plug. So Sean, basically, when COVID happened, right? They gave out these government programs to help business owners get back on their feet. They gave them paycheck protection program, which they gave each business, X amount of funds to help them not close, right? And then the government came out and said, when you have employees, you have to pay payroll taxes on those employees, right? So your employer is responsible for paying payroll taxes to the government, and he has to make a tax filing on those payroll taxes every quarter to the government, saying this is all my employees and this is all the payroll taxes that we filed on their behalf to pay for them, right? The government came in and said all those payroll taxes that you paid for your employees, you can now get 70% of those payroll taxes back, okay, each quarter during the pandemic. So from 2020 and 2021, for 3 quarters of those years, you can get all the payroll taxes that you paid back up to 70%, okay? So this was huge money. When we read this, we keep up on all the tax codes. Me and my partner were reading this December of 2020. We were reading this and we were like, this can't be true. Like this is could be huge. And I said, so we couldn't sleep at night because we said what happened was we have to look into this and see what the qualifications is. We found the qualifications and we had this huge restaurant with over 400 employees. And we said, let's file for them. Okay. So we filed for them. I didn't sleep for probably 3 or 4 months because basically what we did was you have to amend those returns that we filed in the past to the government saying now we're going to change like you would do on your tax return, right? If you make a mistake on your tax return and said, wait, I actually made less money than I'm claiming to the government. All right. I want to amend this return and get back that money. We're doing the same thing with business owners. So we're saying we're amending all these returns and we're applying for credit. Now the government's going to give you back that money, but then after 2 years, they're going to audit you. And if you were wrong, you are screwed. Okay. So we basically went out on a limb and amended all these payroll tax returns for this business. And we were going to get back to them now $4.5 million for this business. Okay. 5 months, 6 months, we don't hear a thing. I was having so much anxiety because I'm like, oh my God, if I'm wrong about this, we are freaking screwed. We're going to get sued. Like, all of a sudden checks started coming in and I was like, oh my God, it's real. I'm like, this is real. I said, get the hell out of here. So everybody starts, once the checks start coming in, everybody starts talking. We start getting phone calls, get me the money, get me the money, get me the money, right? Just through word of mouth. But then when we went to a marketing standpoint and we had to market this and said, no upfront cost, you pay us basically out of the check that we give you. Right. So if you get $500,000, we get paid a fee out of that 500,000. That's it. No upfront cost. We couldn't get marketing. It was like so hard in the beginning. You couldn't get anybody in the door for that. But then once enough people started getting checks, I would say after like a year, it became so oversaturated. People started oversaturating this ERC. It was like if you weren't a business owner, it didn't matter. You got phone calls about ERC. What's his name? Kevin O'Leary, the Shark Tank guy. He even started a whole business on ERC like 3.5 years after the fact. So it became so big. But in the beginning, when people missed out on, we were going to payroll companies, okay, saying like, listen, you have access to all the data because there has to be a certain number of employees in order to qualify. So we would go to them and say, listen, go to your current clients. You have all the data to see if they qualify. All right. Pitch this to them. None of them said, no, I don't want to do it. We had one company that said to do it, and they changed the whole landscape of their business because of it. Like they blew up. They doubled their business in size by 45%. They doubled their business because of it, because they ended up getting long-term clients from that. So it's just like, it's amazing. Like when you give people for free, it's just like it's like, okay, so if I charge them $50, $100 for something, you'll probably end up getting more bites than just saying, like download this free content.
That's pretty cool. And you know what? I've seen that too. Even with my old podcast, The Fitness Oracle, I used to give people free, training programs, free, nutrition guides, nothing. And it was a pain. It was a
That's a
pain.
great, and now thinking about it, the good thing about podcasts, when you do this dialogue, which I really like, it's like you're brainstorming too, in a way, right? You kind of come up with good ideas. And what would be a great idea, right, is for somebody to find some type of marketing company or find that data, which I'm sure that's out there, that anybody that's ever done a case study to go out there and interview your average business owner or your average podcast listener and say, if I gave you this for free, would you take it? And ask the reason why. Like I'm telling you my reason, but like my reason means bupkis, right? Like, go out there and get the data and see what people are trending at. Like, would you get more clients if you charge a small fee? And if you did, okay, now you know what to do. And now you're not wasting your time building out training programs that probably took you a long time to do and nobody took it. So that's valuable data right there that can probably make a huge difference.
100%. We're coming up close to the end of the show, and this is the Rebel 5. The 5 questions I ask all my guests to get their perspective on these topics. If you could go back to day one of your journey, what would you tell yourself before you got started in accounting?
Become a lawyer. I should have became a lawyer. Serious. I'm serious, man. Lawyers just make a. I do accounting for lawyers, and I see what these guys make, and we do the same amount of school, and we take the same amount of the same credentials, for the CPA and the bar and all that stuff, and they make quadruple of what we make. Listen, I'm not crying poverty. I make good money. Don't get me wrong, but no, I'm just joking. I would. Um, I wish I knew my. I wish I knew that. I wish I would have convinced myself more. Had the self confidence, and I wish I had more self confidence and more awareness when I started to know that my goal was to become a business owner. Instead, listen, I won't take for granted the experience I got out there when I first started in consulting, but I worked jobs. I worked for top firms in Manhattan, Cantor Fitzgerald, right? They're one of the, I don't know if you've ever heard of them. They're the people that lost the most people in the 9/11 attacks in the World Trade Center. They were huge. But I worked for them. I worked for Hudson River Trading, which was a huge. Um, uh, um, they're a they basically use AI to do trading for them. They were one of the first ones to do this, and but I just wasted time working at these places that did not help me in the least bit to open up my own business. What did help me was working for a smaller business with 10 employees, where I learned more about accounting and how to help the business owner than I would working 4 years at one of those other places. So I just wish I knew. I wish I built out like kind of like a vision board, or like kind of like the goal list on where I wanted to be in a couple of years, so I didn't waste all that time.
When motivation disappears and no one's watching, what keeps you showing up anyways?
My kids, man. Yeah, I'd say that all the time to when I talk to my buddies on the phone, like other colleagues that I have alliances with, and I say I'm having such a hard time getting motivated. I said that is like when you own a business, and I think one of the biggest struggles in business for me personally, is staying motivated and staying consistent. It is very, very hard, and you can lose focus very easily. So I do affirmations, like stuff like that. Like I literally have like post-its on my bathroom mirror. One of them says, you deserve to see what your life will look like if you gave 120%. And one of the other sayings I have on there is, comfortability hinders growth. Meaning that I have to get uncomfortable if I want to grow. If I'm comfortable, I'm not growing. And if I want to live the life that other people don't live, then I have to do what other people aren't doing. Right? I have to go outside my comfort zone. So like I try to like, kind of instill in that, every day, kind of like, get focused, get those mantras, kind of instilled in me, and walks are great too. I have to say I walk my dog every morning, and I kind of put in one of the great thing I do that gets me really motivated is in the morning time I walk my dog, and I go on YouTube and I just listen to kind of a motivational entrepreneurial video that they have on there. I have some great ones. They change your whole day. They change your whole day for the morning. They really do. Because when you're walking, then the endorphins going, and then top that with the motivation, that could people that can really get you going. It's just a great way to start your day.
Yeah, I used to listen to when I was living down in Florida. I used to listen to a I am motivational thing when I would go for a walk around the 5 mile block that we had. It was
Okay.
great.
Yeah, no, it's such a great way to start your day, man. It really is.
What's the failure that punched you in the mouth but ended up building your backbone?
My sobriety. My sobriety, man. I got sober at the age of 25. I did a lot of partying, a lot of drinking, a lot of drugs. You name it, I did it. And I'm not ashamed of it. Listen, In today's day and age, would I say if this was 15, 20 years ago, would I talk about it? No, because there's a stigma attached to it, right? They think, oh my God, he's a recovering addict. We can't hire him, or but it's just so much more accepted these days. And I feel like 1 in every 3 people you meet, usually has some type of addiction problem. But it made me into the man I am today. I got sober at 25. I went back to school, my 3rd year sober. So I went back to school at 27, and I started from nothing. I lived back home with my parents, okay, in an 8 by 8 room, literally the size of my office. Okay, it was the size of my room. I stayed there for 8 years. Okay, working 2 jobs and going to school, you know, full time, summer classes. I gave myself 2 weeks off in the summer, and that was it. And I worked my ass off, and I went through my pain and my trials and tribulations and sobriety that built the character in me that I have today. And that's what gave me the most backbone, and still does today.
Amazing story. Thank you for sharing that. Me
Yeah.
too. I'm recovering alcoholic as well. So
Oh, you're kidding me.
yeah. Well,
Oh,
I'm fully recovered. Fully recovered. I don't drink anymore, but
yeah,
yeah,
yeah, yeah.
I used to drink a lot. When I was in my 20s. Ooh, man, that bottom of the barrel was my friend.
From the bill, or
Sorry, the
from the
bottom of
bill?
the bottom of the bottle was my friend.
Oh, okay. I got it.
Yeah,
Yeah, that's good to hear, man. We're not alone, right?
yeah. No, never alone. Never alone. How has your idea of success changed, and what does it really mean to you now?
Um, my idea of success has changed where, like, I settled for less when I first when I first started working in my field in accounting. Um, it was so like gut wrenching. Like, I would come home with ulcers, working in corporate. Literally, I couldn't sleep at night. I would get into my office, into work in the morning, and I felt like I had to go to the bathroom, not to be too bad, but like that's the type of nerves I was having. And and I would take whatever job was better than that, and I would just settle for less. And like for me, I was just happy with what I had, and I'm like, this is success for me. And then once I got a taste of it, and I really started making it, not making it, but for me making it, where like I was just able to provide the things for my family that I was never able to be provided for. Um, that's what keeps me motivated every day, and that's what the level of success that I want also. Um, and also just to kind of leave a legacy also, like that's a success for me, and my goals going forward is to leave something for my kids, and kind of be a role model for them, to show like, look what daddy did, right? Look where he came from. I came from a 1 room apartment in Queens, Queens, New York, where I grew up with my mom, who came from a third world country. I shared a bed with my mother and my sister from the age of like, 12 years old up to we had a 1 room apartment, to where we grew up now, to the life I have today. It's just like, and I owe, not to get religious or anything like that, but I owe it all to God. It's not me.
It's okay. You can get religious here. It's fine.
Yeah, no, it's not me. It's all God, and I don't do anything, man. I just show up.
Cool. If this mic went dead right after this question, what final message would you want every creator to hear?
Um, this might went dead. I would say, know your worth, right? Like I was just saying before, don't settle for less. Do not settle for less. No matter no matter how stuck you feel, your niche is out there, right? And I say niche because that's how you have to. If you want to make it in business, you have to find that niche. Unless you're like, if you're just going over for the same pot, you're gonna get a little piece. But if you could go after that niche and find that particular area, that has value, and that has pain, right? That's how you're going to make it here, right? You have to know people's pain, and come to a solution with it in a specific industry or in a specific field, wherever that may be, podcasts, wherever. Um, don't settle for less. Find that niche and capitalize and execute. and just know, like I said, not to be corny and sound like a mother, but like you really, if you put your mind to it, you can do it. It's just you have to be willing to put in the work, and I mean work, 12-hour days or whatever you have to do, but it can be done. If I can do it.
Sonny, thank you for breaking down the numbers in a way creators can finally understand and for showing that financial intelligence isn't complicated, it's empowering. Your journey proves that clarity, structure, and discipline can transform a creator's business from guesswork to confidence. All right, Rebels, remember this: your voice has power. Every episode you record, every story you tell, every time you hit publish, you're not just making noise, you're making history. Don't wait for permission. Don't play small. The world needs your voice, raw, real, and unapologetic. Keep creating, keep pushing boundaries, stay bold, stay sharp, and as always, long live the rebellion.